I'll send out a tweet about my live stream. Get some guests up in here. Do 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 do. Cool. Okay. Let me wake up. Or at least try to. Well, let's see how this went. Wow, good revenue number. 1166.4, not bad at all. Let's see how it broke down on admissions versus. Alright, admissions were 651. Wow. Pretty good. Definitely above my estimate. Food and beverage, above my estimate. Other theater. Okay. So that was all pretty good. Ooh. These costs were a lot higher though. Huh. I don't know, so it looks like my, I see. My cost estimates were way off. That's why. So let me see if I can do like a film margin. Here's film gross margin. I didn't have that adjusted for normal operating costs. So let's see. Film gross margin, a little lower than normal, but not bad. So let's see, film gross margin. This is film expense really, not gross margin. So this is, yeah. So yeah, film gross margin was a little light. Pretty much haven't had that bad of a film gross margin in years. So not good. But, you know, all things considered, not the end of the world either. Operating expenses, quite high actually. Not good. Bad cost management in general. Rent was okay. And G&A was high too. These guys are spending too much. So EBITDA was, I mean, they had negative EBITDA. Pretty terrible. Yeah, cost management not good this quarter. I'll say that. My definition of EBITDA, they're slightly positive. You got to exclude D&A obviously, so otherwise it's not EBITDA. Earnings before interest, taxes, and D&A. Non-cash exhibitor services agreement. Okay. It wasn't the worst quarter. I think there's probably hope for more profitability, but the revenue beat was. It's a lot of revenue, I have to admit. Even though I'm short AMC, you guys Be honest with yourself. Accept reality for what it is. And AMC is, I don't know, they had pretty solid revenue quarter. Pretty solid revenue in the quarter. I'm not sure that they're... This doesn't include after hours yesterday, I don't think. So what will revenue be this quarter? And I have to triangulate this against there was some box office like survey that said Q2 was going to be really bad. That a lot of the short sellers were circulating, but it's pretty good. It almost matched the holiday quarter, which was, it's hard to, that's a big cyclical quarter, I think. So I don't know. Still trying to get my head around it, I guess, but I've never made use of body doubles, no. Well, there are Top Gun type movies every quarter, XKO, to be fair. You're going to have Avatar come out, and then you're going to say, how many Avatar type movies are there going to be? So, there's a lot of different things on the calendar that are pretty exciting on the movie side, but again, not a field I know that well. Let's keep digging in. Yeah, so I mean, obviously things are starting to normalize for COVID as well, but doing, $4 billion-ish of revenue. Let's see how the balance sheet and all that worked out. Well, they're not giving it in-depth. Let's see, maybe they are. There's US, international, bunch of adjustments. Alright, they didn't give full financials. Frustrating. I always hate when companies do that. I don't know if they're waiting for the queue or not. Well, the queue's out, so let's just get it from the queue. Alright. Sega went up a lot yesterday. I guess the White House, it was down a lot, and I went to some meetings feeling good. And then all of a sudden, the White House said that monkeypox is some horrible thing that's going to kill us all. Alright, so AMC's cash went down. Again, not a good thing. Not a good thing. Let's see how liabilities did. Yeah, well, it looks like they paid some debt off, so that's why the cash went down. That's okay. As long as this net cash number doesn't go down too much. It went down 60 million. They're supposed to be paying off debt over time, but net debt went up 60 million. That's cash minus debt. A little weird, but give them a couple more quarters. You gotta give them a little slack. Something here. Maybe double counted something. A Let's investigate. Finance lease. Okay. Operating lease. There it is. All right. The all-important cash flow number. I don't know. I love Nassim Taleb and I hate Nassim Taleb. It's stuck in quantum superposition. He's a weird guy. He's very emotional. He's not as rational, I think, as he'd like to think he is. But he's an interesting thinker. And sometimes I think he's not an interesting thinker. So, like, there's a lot of cross currents there. All right, cash flow from operations. Long story short, did not look good. But let's take a look at the details. Loss of extinguishment of debt. Hycroft. NCM. I'm going to put that in here. Okay. This is a hell of a complicated cash flow statement for such a small company. Well, small is relative, I guess. A company of this size, I'll say. Can you guys hear me okay, by the way? This call at 9 o'clock will be really entertaining. I hope you guys enjoy that. All right. Net periodic benefit. Ugh. Periodic benefit income. Okay. Okay, so cash flow from operations was negative 77 million. So running their business costs money, right? That's the same thing as last quarter too. Not good. And we're supposed to be in a post-COVID period, right? Where, you know, they're, you know, things have gotten better, but they haven't. I don't know anything about the carbon market, sorry. Energy is not my thing. Let's see, disposition, sales, securities, investment, consolidation. Yeah, this is not good for AMC. Their free cash flow is negative 100 million, and this is supposed to be in good times. I mean, there's no COVID excuse anymore. People go in the movie theaters. Movies are coming out, right? Maybe there's a little residual hesitancy, but it doesn't make a lot of sense that they're losing money in this environment. Let's see what management has to say on the conference call, but I don't know. That's not good. Let's see. I'm gonna have to start psyching myself up for the VC pitch. I don't know if you guys have seen the Dwight Schrute and how he does it. Sell securities. Done. All right. Did I never do the CFFF? Might as well. Maybe I'll go back and do that. let's listen to the conference call. I like the guy with ADHD telling me I'm wasting my time. Let's compare our careers. You tell me what to do. The fuck out of here. You fucking crazy?
Greetings and thank you for standing by. Welcome to the AMC Entertainment second quarter 2022 earnings conference call. During the presentation, all participants will be in a listen-only mode, and afterwards we'll conduct a question and answer session. At that time, if you have questions, please press the 1 followed by 4 on your telephone. If at any time during the conference you need to reach an operator, please press *0. This conference is being recorded Thursday, August 4th, 2022. And now I'd like to turn the conference over to John Merriweather. Please go ahead.
Thank you, Scott. Good afternoon, everyone. I'd like to welcome you to AMC's second quarter 2022 earnings webcast. With me this afternoon is Adam Aaron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned to not place undue reliance on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures, such as adjusted EBITDA, constant currency, free cash flow, operating cash burn, and operating cash generated, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the investor relations section of our website earlier today. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded and replay will be available in the investor relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, one and all, and thank you for joining us. Today, we have tremendously exciting news to share with you. First, our results for the second quarter, which were massively ahead of last year's second quarter, and exceeded market expectations for revenues, adjusted EBITDA, and net income. And second, our plan to issue later this month a special AMC preferred equity, non-dilutive stock dividend, as it will all be going, and only be going, to our shareholder base as of the dividend date. This is a move that fundamentally and deeply strengthens our company and will give us enormous flexibility as we go forward. These are exciting times for AMC and for our investors. I'll start this webcast by talking about the business. I'll then pass the call over to Sean Goodman, our CFO, to talk about our financials in more detail. And then I'll come back to talk about our special dividend announcement and the significant benefits that it brings for our shareholders. I cannot begin to put into words how much progress AMC Entertainment made in the second quarter of 2022. Thank you to Dr. Stephen Strange, to Tom Maverick Cruise, to Elvis Presley, and to all those hungry, people-eating Jurassic dinosaurs. Because they all graced our big screens at AMC. The second quarter was quite the success, and our best second quarter in 3 years. What's more, and this is very important, they boosted Hollywood's confidence in theatrical exhibition, and they boosted Hollywood's commitment to theatrical exhibition. Just as we predicted, our improving second quarter results boost our spirits and serve to further convince
boosting
that
cash.
we indeed are making great strides on our path towards pandemic recovery. As you can see in our press release, AMC exceeded expectations as people came back to movie theaters in droves. Some 59 million moviegoers came to our AMC theaters across the world in the second quarter, up 168% from the same quarter a year ago. That's more than 2.5 times. They're taking us to new highs in our high-margin food and beverage business. And thanks to their patronage, we generated positive adjusted EBITDA of $107 million in the second quarter of 2022, a $258 million improvement over that figure in Q2 of 2021. We generated positive operating cash, too, in the second quarter of 2022 of $52 million. That was a $178 million improvement from the figure of the same quarter a year ago. The second quarter marked the strongest North American box office since 2019. Numerous films shined brightly in the second quarter, but none shine brighter than Top Gun Maverick. I've seen it myself 4 times now. Top Gun Maverick is now approaching $1.3 billion in worldwide box office receipts and holds the #1 box office position thus far in 2022. Maverick also broke all-time records by becoming the highest-grossing movie of all time to open on Memorial Day weekend. It also is becoming the highest-grossing movie ever, both for Paramount Pictures and for a movie starring Tom Cruise. I have said all along that people would come back to theaters in eye-popping numbers, and that is exactly what they did in the second quarter of 2022 and what they've been doing since. To the naysayers, who foolishly, in our opinion, have been predicting a secular decline of theatrical exhibition, all I can say is, well, you've seen my feisty hashtags on Twitter. You know what I say. The second half of this year promises to be equally exciting, with a great mix of family-friendly horror, action, drama, and comedy genres to please everyone, from young to old, including Warner Brothers DC Comics-based Black Adam, starring Dwayne "The Rock" Johnson, and 3 Disney films, including the animated Strange World, and 2 very highly anticipated tentpole Disney sequels, James Cameron's Avatar 2, The Way of Water, and Marvel's Black Panther, Wakanda Forever. Just last week, the powerful and poignant trailer for Black Panther 2, Wakanda Forever, was released and garnered a staggering 172 million views of the trailer in just the first 24 hours, becoming one of Marvel Cinematic Universe's top ever trailer debuts. As Nicole Kidman reminds us in AMC's now iconic and revered advertising campaign, given that Hollywood has great stories to tell, it's clear that movie fans are ever so eager to enjoy those dazzling images on AMC's huge solar screens. I'm speaking of Nicole. Our ad campaign was so effective that we signed her to be our spokesperson for another full year. The success of the second quarter has continued into the start of the third quarter. As but 2 examples of let the good times roll. Attendance in the just completed month of July 2022 saw the highest number of guests visit AMC's U.S. theaters since December of 2019. And our preliminary July food and beverage revenue numbers appear to be the biggest single-month figure at our U.S. theaters in our company's entire 102-year history. For full transparency, there is a dearth of new big movie titles being released in August and September. So things will slow for several weeks. Don't expect too much of us for all of Q3. But then comes the fourth quarter of 2022. Talk about star power showing itself in movie theaters. These movies and more will all grace our screens in just the 13 weeks of the fourth quarter of 2022. Jamie Lee Curtis in Halloween Ends, Julia Roberts and George Clooney in Ticket to Paradise, Dwayne Johnson, Pierce Brosnan, and Viola Davis in Black Adam, Jessica Chastain, Anne Hathaway, and Sir Anthony Hopkins in Armageddon Time, Margot Robbie, Christian Bale, and Robert De Niro in Amsterdam, Tom Hanks in A Man Called Otto, Brad Pitt and Margot Robbie in Babylon. Oh, and don't forget the ever so much anticipated sequels to Black Panther, Shazam, and Avatar. So too, the movie slate for calendar year 2023 should also make us all smile. Our current internal forecast is that the 2023 domestic box office, the basic metric suggesting the health of theatrical exhibition, both in the U.S. and globally, is likely to be billions of dollars larger than that of calendar year 22. Billions of dollars ahead. We look forward to Q4 of 2022, and we look forward to calendar year 2023 with absolute glee. There were other strides forward made at AMC in the recent months since our last quarterly call. We started the installation of the biggest environmentally friendly green initiative in our company's history with the introduction of laser projection technology coming over the next few years to almost half of our U.S. screens. And laser projection will make the pictures on those screens so much brighter and so much sharper that it's certain to excite movie buffs going forward. We're already in test market in Chicago and Kansas City with our partner, Uber Eats, for home delivery of AMC Perfectly Popcorn and other concession items from our theaters. The early results are favorable, so we expect to roll out nationally in Q4 of this year. Similarly, recipe development for microwavable and ready-to-eat popcorn is well underway, going extremely well, and we look forward to being able to sell our popcorn products in grocery stores and or convenience stores next year. We're also in active dialogue with a credit card issuer and hope to introduce a co-branded AMC credit card that can be launched nationally in early 2023 or possibly as early as late 2022. And at the specific urging of our shareholders, we are stepping up our game mightily on AMC branded and movie branded merchandise. As for Hycroft Mining, Hycroft has announced its largest exploration program in about a decade. Remember that heretofore, Hycroft has explored only about 2% of its 71,000 acre mine site. We have every confidence that our Hycroft investment will pan out, excusing the pun, to be quite lucrative for AMC. Speaking of investments, our board of directors also has authorized us to establish a fund of up to $100 million for additional transformative investments where AMC can seek to add value and thereby create meaningful additional value for our shareholders. Indeed, as I've often said previously, we are absolutely committed to transforming AMC into a bigger, bolder, stronger, and more successful company than even the one that existed prior to the pandemic. With that said, I'll now turn the call over to Sean to discuss our financials in more detail. Sean?
Why don't you discuss them?
Oh, just one response. And you may begin.
All right.
Yeah.
Please do.
Thanks, Adam, and thank you everyone for joining us this afternoon. As Adam said, Q2 was a terrific quarter for us. We welcomed 59 million guests to our theaters around the world, and this is well ahead of the 22 million guests that we entertained during last year's second quarter and the 39 million guests that visited us in the first quarter of 2022. This attendance resulted in revenue of $1.17 billion. This is more than 2.5 times the $445 million of revenue we had in Q2 of 2021. And it's almost 50% ahead of the $786 million of revenue that we recorded in the first quarter of this year. But even more importantly, we achieved positive adjusted EBITDA of $107 million, a very meaningful improvement over the EBITDA loss recorded in both the prior year's second quarter and also the first quarter of this year. Our financial results clearly reflect the ongoing recovery of the industry and our business. As has been our practice during the recovery period, we believe that it's helpful to look at our financial performance metrics relative to pre-pandemic levels to best benchmark the dynamics and profitability of the business as our recovery progresses. This analysis shows that our per guest performance metrics during the second quarter were universally substantially superior to pre-pandemic levels in 2019. For Q2 of 2022, on a consolidated basis, total revenue per patron was $19.73. This is 27% higher than Q2 of 2019. This was driven by admissions revenue per patron growth of 19% and food and beverage revenue per patron growth of 32%, and other revenue growth per patron of 65%. This is all compared to the second quarter of 2019. In the domestic business, admissions revenue per patron increased by 22% compared to Q2 2019, and in our international business, the increase was 12%. And when we normalize for the strengthening of the US dollar compared to 2019, international admissions revenue per patron increased 16%, measured in constant currency. The admissions revenue per patron growth was driven by guests choosing to upgrade to the very best possible sight and sound experiences that are found at our premium large format offerings, such as IMAX, Dolby Cinema, and AMC Prime. Premium large format attendance represented 15.6% of domestic attendance in Q2, and this can be compared to 10.9% in the second quarter of 2019. And in our international markets, Q2 2022 premium large format attendance represented 10.4%, and this compares to 6.4% in the second quarter of 2019. In addition, the second quarter admissions revenue benefited from an overall favorable showtime mix coupled in-theater entertainment experience. In our domestic markets, food and beverage spend per patron in the second quarter was $7.52. That is 35% higher than the average spend in pre-pandemic Q2 2019. And in the international business, food and beverage spend per patron was $4.43. That's 22% higher than Q2 of 2019 and 26% higher on a constant currency basis. Our significant food and beverage outperformance continues to be primarily driven by an increase in the proportion of guests choosing to enjoy our industry-leading food and beverage offerings, combined with them purchasing more items per each order, and both of which are made easy and convenient through our AMC apps. Compared to the second quarter of 2019, domestic other revenue per patron increased by 65%, and international other revenue per patron increased by 63% and 69% in constant currency. This reflects an increasingly higher percentage of guests choosing to reserve their seats and order their food and beverage using our industry-leading websites and apps, together with the benefit of growth and diversification initiatives such as renting out our theaters during off-peak times and revenue from various promotional and marketing initiatives. During the recovery period, we have been very agile in adjusting our payroll hours and flexing showtimes to reflect market demand and optimize efficiency. Our Q2 domestic attendance represented 60.5% of Q2 2019 attendance, but 85% of Q2 2019's attendance per showing. Let's move to cash and liquidity. We ended the quarter with a strong liquidity position of approximately $1.18 billion, comprised of $965 million of cash and cash equivalents and $211 million of undrawn credit facilities. The strong results for the quarter led to non-GAAP operating cash generated of $52 million. That's operating cash generated. This is a $178 million improvement compared to Q2 of 2021. Recall that this non-GAAP operating cash generated measurement represents cash generated before debt servicing costs and before deferred rent payback. Looking ahead, we would expect a return to non-GAAP operating cash burn in Q3 as we experience a seasonally strong, softer box office together with working capital pressures relating to the strong Q2 box office. However, we do expect a return to positive non-GAAP operating cash generated in Q4 of this year. Regarding capital allocation, we continue to pursue a balanced and disciplined approach to capital allocation. Our main priorities remain unchanged. 1, ensure that we have sufficient liquidity to manage through the recovery phase of our business. 2, strengthen our balance sheet by reducing our debt and associated interest costs. And 3, investing in our business to enhance the guest experience. And finally, 4, opportunistically pursuing value-enhancing initiatives, including those that lead to diversification and growth of our business.
Spectacular.
As previously reported, during the quarter, we quietly strengthened our balance sheet by repurchasing through the open market approximately $72.5 million
Ever so
of our
favorably.
10% second lien subordinated secured notes that are due in 2026. We did this repurchase for approximately $50 million, and this represented a 31% discount to the face value of the
Turn
debt.
off my notifications.
As a result of this transaction,
Reddit.
we recorded a gain on debt extinguishment this quarter of $39 million, and our annual interest costs will now be reduced by $7.25 million. During the second quarter of 2022, we also strengthened our balance sheet by repaying approximately $53 million of deferred rent, reducing our deferred rent balance to approximately $219 million. Recall that back in March 2021, this deferred rent balance was more than $470 million, and over the last 15 months, we have lowered the deferred rent balance by more than $250 million.
Okay,
We
turned off
expect to further
my
reduce this deferred rent balance
notifications
during the
for
second half of
Reddit.
2022 by another approximately $70 million.
So yeah, I don't know. I think that it's possible that revenue may pick up further, and that they start to sort of have a little bit of a better operating performance. But let's take a look at what else the 10Q has here. 585 domestic theaters. They actually have fewer theaters than before. Get out of here. 390. 593, right? 585. confusing disclosure there. Alright. See, screen advertising 32.3, last year is 19.7. So that makes 30.5. Right. Makes this 86.4. Great. Look at all this lovely debt. Oh, this isn't bad. 4.2% coupon there. 2026 term loans. Note this down here. These other two a little more expensive. Pretty high yield. It's a shame interest rates have gone up. They should have refinanced earlier. Yeah, they're spending too much money on G&A and stuff like that. I don't know. It makes me not trust the CEO. You know, they're in a tough position, and maybe I'm being too hard on them. This was the quarter where they should have like pulled out all the stops to have a huge earnings beat, and they didn't. And that's, I think, why the stock's down. This is the most US film revenue they've had in a really long time. Oops. International was kind of weak. I guess Top Gun didn't do the trick out in Europe. Yeah, Terzepatide's kind of exciting. I mean, it's kind of in the stock to some extent. And Terzepatide could be disappointment too. I mean, the GI toxicity is not trivial. All right, here's the movie screens. Or not. Here we go. Alright, number of screens, operated or average screens. What am I looking for? Huh. Maybe I'll do... I'm not even sure. It's confusing. I guess I'll do it like this. Average screens. Then I'll... have to scrub this data at some point with a fine-tooth comb. Let's see, attendance. Interesting, attendance didn't quite match up to Q1. And even in Q1, they didn't make much money. Sorry, Q4. Trailing 12 months, 100 million in income. And that's EBITDA, obviously. Yeah, that's, we definitely are still, I mean, the only explanation is that we're still in a pandemic period where there's still a while before people return to the theater. I mean, that's the only real possibility here. And I don't know, it feels like they're kind of back to full capacity, but I don't know. We'll just have to wait another quarter, I guess. Fine by me. Because I'm short. I don't care. I hope the stock goes to 0. How about that? Hope every AMC movie theater closes. All the joy in the world is removed. Exactly. Twirl the mustache. Now, when you're short, it does kind of weird things to your brain. But you have to be just kind of like, I don't know, reasonable. So yeah, let me look at that box office number everybody was looking at. Box Office Pro, no. Was it this? Let me see. Yeah, I think it was this. This was what everybody was looking at, and they're saying, oh, this is, look at this. This is why AMC is going to do so poorly. And it wasn't that bad. The revenue was okay. So let's see here. Q2, cumulative gross, Q2 20. Right, so that's Top Gun. Alright, so let's see. 2322.682. So that's domestic box office for US. I mean, that's what domestic is, right? Yeah, domestic. Okay, cool. Q1. Yeah, that's pretty good. Alright, and now Q4. That was for 21, right? 2067-228-086. See, that's the interesting thing. Q2's box office, according to this website, was better than Q4, but AMC's revenue was less than Q4. So that's a little strange. And you could see how, like, the theatrical releases impact everything. And I guess Q1 there was some pandemic fear, so like Q1 I think traffic was low, but it's probably low cyclically anyway. It's winter after all. The summer's supposed to be, right, the big summer and the holidays maybe are supposed to be the big movie quarters. I'm still figuring this out. Let's see. Q2 21 is definitely all pandemic, right? Nothing was worse than 2020. Oof. I mean, it's impressive they survived this, but the question is, what is this worth now that the pandemic is largely over? I mean, I don't go to the movies because I don't want to get monkeypox, but that's a whole other story. this sound? Who's making this sound? I'm behind 4 proxies. Alright, so one way to think about whether or not they've really gotten back to pandemic highs is Q4 19. Okay, this sound's starting to tick me off. Stop doing that. Scaring me. I feel somebody's inside my computer. I don't know how to tell you to be motivated. If you're not motivated, I mean, it's your life. It's not my life. You're not motivated about your own life. I don't know what to tell you, bro. Come on. Alright, so I guess there's still the good news, and this is probably really good news, is they're still a long way away from pre-pandemic. So if you look at Q2 22, Q2 19, excuse me, they still are only 70% of that. So they've got some time. And here's how I'll model this. Let's assume they can equal Q3. I mean, they're not going to equal it maybe, but let's just take Q3 19 and do, let's say inflation offsets the secular decline of movie theaters. Let's make that argument. Let's assume their revenue, let me do this a little differently, hold on. Q3, what am I doing? Q4, good, and now Q1, let me go back to 19. Q1 19, 2400, 25,631. So make this that. I'll make this that. So I'll keep kind of recycling this. And what I'll do is I'll forecast revenue on the basis of kind of a renormalization. This is a weird way to do this, but does that make sense? No, hold on. So whatever the box office is, AMC has captured historically, excluding the pandemic quarters, something like 55% of box office revenue. They kind of call that revenue for them. Film gross margin. Let's see what percentage of the company is film as a percentage. 21%. But last quarter it was much higher, 28%. Looks like in good quarters it's 28% roughly. So let's try that. Okay, there's still hope for AMC. There's still hope. Not that bad. You gotta give them a couple more quarters. They're still... definitely still some hope. Doesn't make it a good stock. I mean, if they can really recover strongly, maybe you can get a fair value, but it doesn't make it a good stock. Oh, and that's fair value at 13. What's the stock price now? 17 or something? Yeah, it's going to be hard for them to get to this point. So anyway, if you want to download that model, that Excel sheet, I'm going to save it on GitHub. So you can go to my GitHub. If you never used GitHub before, it's a tool mostly for computer programmers, but it can be used to share any kind of file. So let me just add it real quick.